this is a bit about me. I guess everyone on the call knows me except for Jamae. I'm Shiloh. I just finished grade 1 in South LA, and I have a CPA. I'm licensed to practice in California, and I have a master's in tax. Apparently, I really love what I do. I've been doing this for 13 years, and I'm also the founder of ComplYant, which is a tax automation tool for business owners. And I'm pretty, yay. I hate that I can't see your guys' faces. This is not cool at all.
No, it's supported, and we're smiling, and we
totally fine. Totally fine. Okay, so we're gonna go through the who, what, when, and the why of this entire business budgeting process. So obviously the what, business budgeting is essentially like what your business is expected to spend versus what it actually does spend. Why this is important is because you're basically flying blind if you don't know what your money is or what it should be. You have no insight into how you can make decisions, and it's just impossible and ridiculous. The other reason is the illusion of money. Money is a lie. Your bank account is lying to you. Your business bank account is lying to you by making you believe you have money that you really cannot spend. And budgeting is really the only accurate tool that makes sure that you spend that the right way. What you see is not actually what you get. And if you're not doing this the right way, it's working against you. So we want to do better. So automation tool number 1, this is general, and I'm sure you guys have all seen these. They're just basic accounting software that you should be using. If you're not using it, find one of these, onboard it. QuickBooks, Xero, FreshBooks, Zoho, they're all self-guided. You do them all yourself. Bench and Pilot will do the bookkeeping for you. This is just basic level bookkeeping, how to get it. Oh, sorry, I'm reading the chat, I shouldn't. Okay, so how to make sure that your bookkeeping is up to date. If you're not using bookkeeping, even though your business isn't making money, now is the best time to do it before you start making money. You set it up, connect all your accounts. It basically puts you in a position where you're ready. So when money does start to come in, you're not playing catch up and trying to clean up while running this business, while on top of all your other things. If you set it up early before you start getting sales, then the actual sales process runs like a dream. So I tell people, I'm like, when am I supposed to do this? The day you decide to incorporate, you need to get some kind of bookkeeping software. When you get a bank account, you should also get software the same day. So the next part is the how. So there are some tricks. This is a sample account. Do not be dismayed. This is not a real person's books. But if it were, I would be very angry at this negative balance. But anyway, so this is a sample bookkeeping dashboard for QuickBooks. They all generally do the same thing. Xero, Zoho, all of them, FreshBooks, QuickBooks, they all do the same thing. And the 4 things you can get it to do to automate your life is obviously connecting your accounts. Try not to use it manually because it gets really hard to keep up with. When you connect the accounts, it downloads the transactions for you and you don't have to worry about it. That's what this is here. These are all downloaded transactions. And then you can set rules for these. So let's say this A rental is a rental space. You can set a rule to categorize A rental as rental and lease for this payee, and it will automatically flush through the transactions as they come in, and you don't have to constantly come in here and do cleanup. I tell people to set as many rules as they possibly can. Even if your income is pretty regular, you know, all your income is going to be retail sales or all your income is going to be software sales, then you can just set that rule that all income is software sales, or dump it in the bucket and then wham, bam, thank you, officer. And then receipt capture is another feature that Xero and I know QuickBooks has on the app. You can take a picture of the receipt. Should you buy something cash while you're out, you can do the receipt capture and it'll download the receipt automatically into your books. You just categorize it and it dumps it. That's a handy feature to kind of automate the process and make it go a lot faster. And then the final step that I tell all business owners to know how to do, you need to know how to reconcile your books. Period, point blank, zero. I don't care if you're so big that you can't even like manage it. If you don't know how to reconcile your books, it's too easy for someone to come and steal from you. And the only way that you can like monitor how your company is going is in the reconciliation process. Even if someone comes in here and manages this for you, you should at least be looking at a reconciliation report. It's basically a detailed report of what your bank account says against what your books say. And those two things need to match. So if you think about it like this, if you're looking to like get investment, if you're looking to get loans or any kind of outside capital, they want to see your books. And your books have to be 100% accurate. So if your bank is showing something different than what your books show, there's no consistency, you're gonna have a hard time proving that out and then getting funding. And it's terrible to be in the final stages of some kind of funding transaction and they wanna see your, P&L or your balance sheet, and you're just looking like, I don't know, what is the P&L? So just making sure that you at least have some idea, even if you don't know what things are called, go through the report sheet on your bookkeeping and just look around, look at the reports, look how they come out, what information is coming up when you click on a P&L, which stands for profit and loss. If you click on that and pops up, what is that? Is it your income? What is it? Is it liability accounts, etc.? Just seeing what things show you, even if you don't 100% know what it is or what it's supposed to be used for. You're the business owner. You need to know how your money looks. So,
Shiloh, we got a couple of questions in the chat. Do you prefer if you address them as they come in, or do you want to save them for the very end?
can we save them? Because I'm
Yeah.
probably going to answer.
I'll just read them out loud at the end.
Okay, that sounds good. And then, because I'm probably going to answer some of them. So the next how is we're going to talk about budgeting automation. So Scoro and Plan Guru. Scoro is sort of a cheaper version. What it will do is it will connect to your bank account or your QuickBooks, and it will download all the transactions into their platform, and it will automatically produce for you projections and budgets. So you can tell it to, here's all my information based on what I've already done. I'm assuming that I'm going to have $1 million to spend, then it will project out based on what you've been doing, what you can categorize per category, and then have a preset budget. Even if you just bought it for 1 month, it's absolutely worth the money. Plan Guru is the same thing, it's just a leveled up version. So if you need something a little more aggressive or fancy, and usually investors want to see projections, it's your quickest shot at that. And it's a heck of a lot cheaper than hiring a CPA and asking them to create projections for you. And it's a whole lot better than guessing. So I would just encourage at some point that you check out Scoro and Plan Guru. They will do the budgeting for you. You just have to connect your accounts and it will populate the projections based on some other attributes that you want to be more specific about. Then there's me, ComplYant. Shameless plug. So what we do is similar, tax budgeting. So we basically tell you on your activity done before, this is what you can expect to pay for your estimated tax payments or for your income tax bill. And it does it based on activity as it connects to your bookkeeping app, whether we've just done Wave and Xero and we're getting ready to integrate into it or QuickBooks. So that's us, tax budgeting automation. And then Zapier. Holy cow, guys, I just discovered Zapier. If you don't know Zapier, please find it. It is magic in a platform. Zapier is awesome because it basically automates every single process you can probably think of that have to do with 2 pieces of software. So you can get Zapier to make a receipt in QuickBooks based on an email. And it will do this automatically. You can tell Zapier to take all the emails you receive and put them into a MailChimp database. You can tell Zapier to take all the addresses over here and create labels over here. And it will do that automatically behind the scenes. I encourage you to get Zapier because it can automate some bookkeeping practices too. It integrates with Xero and QuickBooks, so it will automate processes if you have orders that live outside of maybe a typical order processor. Like I know the usual ones are like PayPal and Shopify, but if you have orders that live outside of those, it can automatically transfer those deals over for you and you don't need to do a lot of data entry. Okay, the benefits of all of this: to minimize anxiety. You can bootstrap longer if you have not gotten investment. Budgeting can help you use your money and make it work well for you for a longer period of time instead of spending everything you have right now and then trying to raise money to get some more. It's also obviously fiscal responsible and makes you look like a really knowledgeable and savvy CEO. You can spot fraud a lot faster. I have had so many clients that have had either past employees still from them or family still from their business. I mean, just, you would be blown away. So I'm always trying to find ways to make sure founders and CEOs have a clear insight into what their books are, because fraud happens a lot more than you know. And tax benefits, obviously. So if your money is allocated in the right spaces, you can take as much tax benefit as your business can possibly get, especially if you're a C Corp. You want to make sure that that looks as best as it can for you. And then I got a question early that Elizabeth sent over to me. When do I need an accountant or CPA? And this might be in the chat, I don't know. You need them at any one of these three junctures, whether you've outgrown your own book management system and you just don't have the time to do it anymore. I don't suggest getting an accountant or CPA to do your books for you, because accountants and specifically CPAs are expensive. They're going to charge you a lot more than what a bookkeeper would charge you. Let's be clear on some roles for a second. A bookkeeper is not the same as a CPA. Bookkeepers do just that. They keep the books and only keep the books. They traditionally don't process tax returns. And I would not recommend, if you have a bookkeeper that's like, I do taxes, say, boy, no. Because bookkeepers are not trained. They don't understand tax law. And tax law is what benefits your company. It's what benefits you as a shareholder if you're a corp. So I definitely don't recommend letting a bookkeeper do your taxes. But they can do your books and probably do a great job. And then I also don't recommend you self-filing your own tax return if you have revenue that's higher than $100,000. Once you start upticking 150, 200,000, 300,000, you definitely run the risk of paying more tax than you should. And if you're at a space where like, I feel really good about doing it myself, write it out, do it yourself. I would just, if you know someone that is in the field that me even, and you want someone to just look over the work you've done, even that will benefit you, because CPAs can run upwards of 1,500 to, I've even seen 25,000. So it can get pricey. So, but also it's a reason for that. You want to make sure, again, you're positioned as best as you can be as a shareholder, and as, you know, the primary responsibility of the business, you want to position the company appropriately. And then also to make sure that you have everything under the sun that you need to have, cough, cough, compliant, because taxes can get aggressive in this way that everyone only assumes the only tax you have to worry about is income tax, and that's just not true. So usually CPAs or accountants can give you a layout of everything you're required to pay, sort of from start to finish. So my last slide is questions, but we can go into questions that you guys have instead of these. They're probably the same.
I can just read them out loud. Let's see. The first question was, which software integrates best with other programs?
It depends. Which software in terms of like bookkeeping software?
Nkechi, we need clarification.
Yeah. So I have, hold on a sec. Oh boy. So I have Clover. But then I also have Constant Contact. Like, I just have so many systems. So I'm just wondering which one of those, like, I need fewer programs, not more. So which one would be the best overall program for integration? Do you hear mommy in the background? Like, seriously? Yeah.
Mommy, don't be mad. It's just
okay.
Chelsea's Richie Bar Mountain.
Okay.
I love it.
Granola bar update. Okay.
Nice.
So yeah.
Nice.
So which one integrates better?
So the tricky thing about that is accounting software has a very specific function. It doesn't do what like a Constant Contact does. It doesn't do what Clover does. So Clover is just your payment processor, but you would need something on the back end of Clover to make sure that your actual full scope books are in place. Clover is just a payment runner. You really need them all. It's horrible because you're just like, this is too much. I just want one thing, but it's not that cool. You really kind of need all of them. I would again recommend Zapier specifically for you because you have so many line parts. Like you can build a Zap from your Clover into QuickBooks. You can build a Zap from your Clover into Constant Contact to build your list that you don't even have to maintain. So I would just encourage you to take a look at Zapier and see how you can find ways to automate how they talk, but you really do need kind of all of them.
Okay.
I mean, Intuit is the big fish. They're 80% market share, so they have the most support. Like Clover has an app integration with Intuit, QuickBooks, sorry. They have an app integration with QuickBooks, so you might be best using QuickBooks because they'll have the most support for you. So you'll be able to find the most direct connection between the other apps you're using.
Thank you.
Next question. And everyone else that is not on camera, feel free to submit any questions you have in the chat. So next question is, what software do CPAs prefer if they have to take over someone's records?
We don't prefer any of them. They're all trash. That's why I'm building my own. If I'm being honest, the most common is QuickBooks. Again, 80% market share. Their market share for a reason, and they usually, like every accounting company, every CPA, every bookkeeper generally knows how to use it. So it's like it's gonna be hard to find somebody, a professional that doesn't know QuickBooks. They may not know Xero, they may not know Wave, they may not know FreshBooks, but for sure they know QuickBooks. I just hate QuickBooks because there's some core things it doesn't do. Like Zoho is the most robust. It probably is the best system I've seen, but not a lot of people know how to use it. And it's a little more advanced. It probably would be really good for the male swimwear line because he's already kind of going and doing pretty well. But for something that's newer or a software company, QuickBooks would be good.
And then Carmen, did you have a question about pricing or at what point?
Yeah, you had just mentioned it's best to get possibly like a CPA once you hit over 100. Is that right? Okay.
Yeah, it's not a hard number. It's really more like your comfort.
Okay.
Yeah, like if you feel good about how you're managing it and you just want someone to do your taxes or file your return, that's fine. I would suggest just having somebody in the tuck that you like can kind of put on a retainer if you need them. Even if you're not using them regularly every day, just someone like, hey, I did my return, but before I file it, can you take a look at it? Because a lot of times like those self-filing platforms, they're really general. And they're really made for like freelancers or people who get W-2s. But when you're a business owner, there's so many other things that come with that. You just want to make sure that someone who is in the game can get you the most out of it. And that's what CPAs do. They get you the most out of what your scenario is versus like a software integration or a solution will just give you what they say. It's like really cookie cutter, which is why it works really well for like W-2s. But when you get deeper into like, I have like 5 businesses and I'm like, passing the $1 million point, then you really want to, integrate. But I have clients that, do over, 2, 3, 4 million, and they have very poor bookkeeping, very poor tax scenarios. I am constantly hounding them. And people think that like money equates like freedom and you'll be able to do all these things when you get money and your budgeting will be right. Wrong. More money, more problems. They hit the nail on the head. People are like, the more money they get, it's like the dumber they get. I don't know what's happening. It's ridiculous.
We can go through some of the questions that were pre-submitted for today. So do you have them ready or do you want me to read them?
Yeah, you can read them.
Okay. So one question was, it was a founder who doesn't quite know how to even get started to file business taxes. So for any early stage entrepreneurs or those that are just now getting started with their business, what are some big key things that you should know and keep in mind when you're filing your business taxes for the very first time?
To use ComplYantApp.com. No, I'm just kidding. I'm really going to do this like every single time someone has a relevant question, just so you know. So I will say what's really popular is like LegalZoom or all of these like third party, sign up yourself kind of things. Legal and tax sort of go hand in hand. So how you're legally set up and if you're properly set up is your tax base. And a lot of people don't think they're related, and they are. So if you are an LLC, are you set up to file as an S corp? That's something you would do with legal. So I would suggest, however you've set up, whatever you've set up, just run those documents by even a paralegal. Like pay someone, $100 or coffee, just like, do my documents look right? Am I missing anything that you might think of? Because again, software has flaws, and we want to think that everything is on the up and up, but you just want to make sure you put a pair of eyes on that, and then take that same set of things over to someone who is in the tax profession. If you don't want to use ComplYant, because this is what we do, but if you know somebody in the game, like okay, now that I've done everything that I need to do, as far as legal is concerned, this is my entity, this is how I'm set up, this is where my business is located, what should I be filing as far as taxes are concerned? That question has come to me so many times. It is the reason why I started ComplYant. Like, oh my gosh, I'm sick of answering this. Let me give you all a place to go, because it's just ridiculous. And it is really based on like what you're selling, and then how you're selling it, and where you're selling it. So those three are key factors. It is not general. That's why I don't recommend people like going on Facebook, like, what did you do? What did you do? Because they may live somewhere that doesn't have the same things that you have. And so you're going to go hunting for this thing that doesn't apply to you. So you just, yes, you can ask around. There are lots of people I know in the profession that will answer your questions, cheaply or free, if not, but definitely there. And then start at your state. So the Department of Revenue, wherever you went to file your entity documents, they usually have like a step-by-step list of things you need to be mindful of as you're doing this process. Like California, you go and say you want to set up an LLC. There's literally a checklist of things that they think you should have when setting that LLC up. So just do your homework, but do it on reputable sites. No Google, no blogs, no Facebook, no friends. Go to like the actual state, go to the actual IRS, like go to the actual city of LA or wherever you are in their finance department. Get them on the phone if you have to, and just, I want to make sure I've covered all my bases. What is that? Yes, no, aunties, please. Lord have mercy, no. And remember, everyone's gonna have a story. Like, oh, this happened to me, this happened to me. But again, tax is so specific to who you are and what you're doing and where you are, that you can't move how you're gonna move based on what someone else has said. Go, check with the professional.
You might have touched on this a little bit, but another question that came in was what taxes are required when starting a business, and how does the location of your business, or does the location of your business have a significant effect on how you're being taxed?
Yes and yes. So to check, I'll give you just a general list. It's 4 things you need to make sure or 5 you need to make sure you're covering. That's your federal income, your state income, your annual report, your business license, and your sales tax. Those are the 5 major key factors. 4 of them are required. Sales tax may not be. You may have a service-based business, and depending on where you are, sales tax doesn't apply. California, generally services are not taxable, so you would not have to pay sales tax, but that depends also. So just be mindful of that piece. Also, sometimes property tax, business property tax is a thing. So if you at some point buy a lot of computers, or you have hardware to make products, or if you have a lot of inventory, there are certain parts of the world or the country where you have to pay tax on the property that your business owns. So just be mindful of that, but that's usually less common. So those are the major areas, and it's absolutely based on what you're doing and where you're doing it at.
Do you know anything about tax exemptions for donors if you're a nonprofit, if you're an official?
Yes.
Did we just lose you? Shiloh?
Specifically.
Oh, there you go.
No, I'm right here.
Oh. Yes, you're back.
So that just depends on what they're specifically asking. I saw that question, I just didn't know what they were asking.
Mark, I think you had asked that question. Feel free to chime in or put it in the chat in terms of specific questions for nonprofit taxes. Oh, I muted myself. We can jump to another question. Another question was, how do I find the right CPA for my business? If I have a tax problem, who should I be seeking advice from?
Not a bookkeeper, not a tax preparer, I worked in accounting at TurboTax or H&R Block, or not nary of those people. I know they're cheap, and I know it's like, oh, but she worked at Liberty Mutual, whatever. No, no. So those kinds of places are cookie cutter. They follow a process. They're not tax professionals. They're not people who literally like study tax law. That is a law. My tax regulation books are legit like this thick, and you get them every year, almost every quarter. So honestly, like, you know, there's a reason. So, you know, I know it's cheap to just ask your homeboy that worked at like, you know, H&R Block, but no, go to someone who has credentialing. At the very least, you know, an undergraduate degree in accounting will get you a long way. And you can usually find them using like your bookkeeping software. They usually have a lot of, yep.
Oh, sorry. Is there like a repository where we can like verify CPA credentials, or like just how do we find like a reputable?
I'm so glad you asked. So the Board of Accountancy, there's one in every single state. And they don't tell you like who you should go to, but they do allow you to verify their licensure. So if you should find someone somewhere else and they're like, yeah, girl, I got my CPA in jail, then you can go on to that Board of Accountancy website and just confirm like that person's name. And you can even ask them for their certification number. They're required to provide you, just like a law degree, the bar, they have like their bar certificate. We don't have a bar like a certificate, but you can ask them for their number and they can go, like you can then go and confirm that they do have what they say, or that it's active. Sometimes CPAs can be inactive, you know, meaning they got their license a while back and then they just didn't keep up the licensure over year. So, and they're equally, I have lots of brilliant friends that are no longer active CPA. So if they're no longer active, they can still help you. They just can't represent you in front of like the IRS or the state of New York should you have a problem. And you can usually find them like QuickBooks has like an advisory, like if you go on their website, there's like find a professional, and they have a whole list of people you can use. Xero has the same thing. I think Wave has the same thing. Good old Google works. The best thing though, not gonna lie, is just ask around. Like ask your friends who do something similar to what you do. You know, who are you using? Do you like them? What do you not like about them? Are they available? Because what you need more than like Google is you need to know what their communication style is, because we get really busy. And sometimes you need someone who can answer you right away, and they, you know, depending on where you go, you may not get that. I've had friends that are like, oh, I don't respond, I have a 1 week policy. I'm like, are they even still alive after a week? Like, no. So you just never know, you know, you never know like what the communication style is.
Nkechi had a question in the chat. She said, what do you do once you're already in trouble, aside from stalk the compliant owner? For instance, I have a tax bill that is incorrect and has come to me 4 months late, which means I'm now in the penalty phase.
Yeah, so this is a great tax lesson. So the way that all taxing authorities operate is they operate in the reactive. They wait until you're already late to tell you that there's a problem. They don't tell you like your bill's coming due, make sure you pay it next week. No. They want you to be late, because if you're late, then you pay penalties and interest. So the entire tax world is built like this. States, locals, IRS, everyone does the same thing. It's impossible. The one thing that it's absolutely cold-blooded. The one thing that you have to be aware of is when you're like dissect that letter, read it in detail. If there is any word that comes to like estimate or assumed or anything like that, that means that it's like, we call those scare tactics. It's like they're trying to get your attention. And if you contact them, follow the directions to reach out. Look to get a human on the phone if you're going to handle it yourself. And just say, hey, this isn't right and I don't owe this. Usually you can get on the line or email with someone who can help you. Also, if there are penalties attached, you should ask for what's called a penalty abatement. That's basically saying, I don't think I should have to pay these penalties. You need to waive them for me. And if you give them a good reason, 9 times out of 10, they'll do it. So those are the two best things I can suggest. If you have a professional do it for you, they're probably going to charge you a lot of money, me included. Not gonna lie, just because, you know, hunting down and handling penalty issues is really time consuming. So it tends to be expensive.
Thank you.
You're welcome.
Does anyone else have any questions? Feel free to throw them in the chat. We had one other question that was pre-submitted. This was about what are the things that you can and cannot write off? And how does that tie to your tax strategy that you should have?
Yeah, I saw that. So I'm assuming that's a question for personal income tax. It's kind of a longer answer. Business tax is not like personal in the sense that you don't write things off. The business just has expenses, and then you include those expenses in your filing. It's not like personal income where like, can I write this off? Can I write that off? It's like two separate things. But personally, I mean, it's pretty general. You know, it's usually like student loan interest and, you know, if you gave away some money, you know, you sold things, some stuff like that, if you moved, stuff like that. But positioning yourself so that you have the best tax strategy so it benefits you the most, yeah, that's tax advisory services, and you need to hire a professional. There's no straight answer for that, because it depends on how much money you make, it depends on where you are, it depends on what you do for a living. So it's all these outside factors that you can't just kind of follow this step and then you'll be like good. It doesn't really work that way.
Okay, we're getting some questions in the chat.
Ooh, yay, I like questions, guys.
From Puno, she said, when you have a new client, what are signs of a healthy company for you?
Oh, for my clients? Oh, not a lot of personal spending. When I see clients that don't have, so a lot of business owners do this, especially like sole props, they don't know how to keep it separate. They buy things for the business on their own cards, and then they're like, well, how do I get these transactions in here? The crossover is chaos. I hate it, because you have to now track down receipts, and crossover you really need to have receipts for. So if you're buying things on your personal account and then you're charging that to the business, you want to put it on your business's books, you have to have receipts. And most of the time they don't. That drives me crazy. When they come in with like years and years of I've done nothing, here, can you like make me square? And then they want oh, but can you do it in a week? No, girl, no. So I can't. But on the flip side of that, when I see people who have like solo owners who've been like managing their own books, and it's minor, maybe they have a few mistakes, but they've been trying, you know, like that to me is really awesome. In terms of financial health, I think some people say like cash positivity, like when your profit and loss statement at the bottom, if the number is in the positive, that means you're healthy. Not necessarily. Health to me is when you don't have a lot of liability. And liability is not on the profit and loss, it's on the balance sheet. So it's basically like loan accounts, credit cards. When you have a lot of liability, that's a red flag for instability. It means you've had to borrow too much to make your business go. So if you have like $1 million in liability, but you only bring in $100,000 in income, that profit and loss statement is going to be cute at the bottom. The bottom number is going to be 50,000 net income. You see me, but you got $1 million in debt. That net income means nothing. So I think people just get really confused when they look at that P&L. It is not the full scope of your business. So I just say like a lot of liability can be dangerous. That's a sign of like instability, non-health. Also, a lot of credit cards, which happens to a lot of business owners. They just keep getting more and more credit so they can have access to capital. That's also a sign of like instability. When you start to get into a place, I have a vending machine company as a client, and he has a ton of credit cards. When you start to get to a space where you do that, my suggestion would be consolidate it all under a loan. You'll get cheaper interest rates. It's just better for you. Don't play that credit card game. I know it's easy, but Don't do it.
Another question is, what is the range for a CPA to keep them on a retainer? What are the best questions to ask them before hiring them?
So that depends. Ranges are so tricky because what's the chief girl number? Please. That depends. A really good, like usually, so if you think of a CPA like a law firm, like usually really big law firms are expensive. They're going to be like, you know, $1,000 an hour or whatever. And it's the same for CPAs. You're talking about tons of years in education and experience and credentialing. So it's not cheap. You're not just paying for them to look at your books. You're paying for the years of experience they have. So it can be expensive. I will say that the cheaper end you usually find like smaller firms where there's only like a handful of people that work there. Those people, that's magic hour for you guys because they're credentialed, so they're smart, they know their mess, but they're not so big that they're going to charge you until you bleed. So also stay away from like when you Google the top business that comes up, not them, because they're going to be expensive. Go down some more. Go down to the bottom. Go to the next page. That's where you live. Page number 2, and then ask them. You know, what's your staff like? Are you, you know, is it just you, or do you have a team? That will give you an insight into like, you know, where they are. If they've got a staff of people that they need to pay overhead, so they're probably going to be a little more pricey. I would say, I think that retainers are difficult because you're paying monthly for access to them when you need it. And usually I've seen monthly retainers anywhere from like 500 to 5,000. It just depends. It depends on what you want that retainer to include. You know, if you want it to just be advice, like you just want an advisory retainer and just call you when I have some questions, that might be cheaper. You might find that for like $200, $300 a month just for some quick emails. Sometimes, you know, I've taken on actual tax clients and I'll charge up the pool for their tax return, but then I give them free access to advisory. So then we can talk anytime, which I think sometimes some clients like because it's like they're not being nickel and dimed. So you may look for that kind of setup, like I'll pay for you to do my return and then I get access to, you know, to you over time. Did that answer the question? Yeah. What else we got?
Did that answer your question? Yes. Okay. We have another question from Puno. She said, do you have a target net profit percentage and owner pay percentage goals? Is it based on revenue?
Do I have a target what? What was that?
A target net profit percentage and owner pay percentage goals.
Oh, so that's tricky because tax regulation, if you guys all don't know what she's talking about, I think you're referring to how much you can take an owner draw against how much you can pay yourself in like a payroll wage. Is that the question? Yes, no, maybe so.
Kind of.
If you want to
Sorry,
get off mute
I can talk. I was just yeah. Thanks so much. This has been really helpful so far.
Awesome.
I think yeah. So I guess I have an S corp with the pass through. So I kind of know that, but I guess like, you know, the idea is that you have a business that is profitable, but what is that percentage for you typically? And my thought is that it would be based on revenue or income. And then like, how much could you expect to be paid, I guess? Because that could also, like as an owner, as a founder, if there are no investors or anything, you're just the sole founder. I'm always kind of like figuring out like what's fair to me, you know?
It's your business. Anything is fair. Ball out.
Yeah.
Pay yourself all the coins. No, I'm kidding. So the two-part question, the second part of that is a little bit tricky because the IRS has these like, not really rules, but kind of audit rules that say like, if you take too much in a profit draw against actually paying yourself, they'll actually audit you. They don't tell you what the percentage is. They just tell you don't do too much. And you're like, what's too much, girl? And they're like, don't do too much. So it's their way of watching you and like tracking, you know, what they think is appropriate. We tell clients, and I've sort of compared notes with other professionals, like we try to sit somewhere like 50-50. Don't ever let your draw or your profit draw be more than what you're taking in revenue or what you're taking in payroll. Also, if you can afford to, if you make more than, you know, if you have more than $1 in your account, that's positive. You're cash positive. So whatever that is, you know, for you, sometimes I've seen business owners take payroll before they're cash positive, and they'll fund giving themselves a payroll. So if that makes sense to you, then great. But because you're a pass-through, really, you take, you know, the benefit of it and the loss of it belongs to you. So it's going to come across to your personal income return anyway. So really, it just sort of depends on what you want to do. It's really
the 50% is that's great. I feel like I haven't heard that. I read this book called Profit First by Mike Malkowitz or something. I mean, it's a little extreme in terms of all the accounts that he sets up, but it was the first time I ever saw like percentage of income and owners draw based off of revenue. So it was kind of like,
yeah, a lot
relief.
of people don't do that. So that's really mature financial thinking. Most business owners are like, I just want to get paid. But that's actually really smart. But because you're not a C Corp, it doesn't weigh so heavily on you. You can sort of flex that a little bit. I think, 25% maybe. You are good between 25 and 50%. I encourage pass-throughs to take as much of that as you can, less of it in a draw and more of it in the W-2, because it's going to preset your payroll tax for you. Use Gusto, take a payroll run once a year, and then you can kind of bulk distribute that, but at least the payroll tax comes out of it and you're not being hit on the back end, because those taxes can be stupid and high and unnecessary.
Thank you.
You're welcome.
Do we have any other questions?
You guys better come on. How often are you going to get a free CPA? You better come with the question.
I know. When are you coming out with your app?
So it's launched, just the bare bone version, but we're tweaking and rerunning it in October. But you can look at it now if you want. Yeah, ComplYantApp.com. Yeah. What else you got? Any tax specific personal situations you want to talk through? You're not too embarrassed to talk about?
I don't have a tax specific, but I'll be 100. I haven't used QuickBooks. I've never, in all the little businesses that I started. So that's why I'm like trying to make sure I get set up right, because I still haven't done all my paperwork for my corporation stuff. It's filed, but I have to do the post stuff, which you've already told me that I need to do it immediately.
Yes.
So as far as like payroll now for the corporation, I had heard on like Y Combinator's like podcasts that founders should even be paying themselves. Like I don't have any revenue yet. We're still like, we're not even at launch yet. So how do I set up this payroll, or when should I set it up? Like, how does that work?
I think that I think I actually know what podcast you're talking about, but that might be relative to like when you start raising money. So obviously you raise your first round, somebody brings in, $100,000, some portion of that you need to pay yourself with. I think that's what they mean. But there are lots of like, Gusto is really good. It's inexpensive and it does all the payroll work for you, and it simplifies it. You just log in and and you're done. Like, I recommend Gusto. ADP is a little bit advanced. If you're a bigger company, yes, but not at the small scale. I think Gusto is a really good solution. And then like there's things like Rippling, where there's like these full service HR CRMs, like maybe when you get to that point, but I think Gusto is a good level. But once you raise around and you've decided to budget in payroll, you'll need to start looking into a payroll solution. I also would encourage you, if you're going to raise and set a raise amount, that you have a budget prepared. So that way, when you get investor questions about how you're going to spend that money, you can answer beyond just, I'm going to hire and spend it on marketing. You know, have some breakdown, because it's going to look different than that. You're going to have SaaS, you know, things that you're paying for. You're going to have, you know, employee benefits. You're going to have all these things that you need to consider that are more than just, I need to hire and pay for marketing. So I would suggest, as soon as you've isolated, like, I need $500,000, break down what that looks like on a bulk budget, and pop into Scoro and just, I think they've got like a free trial or something. Use that trial and see if you can, you know, populate a budget that makes sense. You know, that way you got, and then give yourself, so it's a little bit different than personal finance. And I know you posted on Instagram, Carmen, about, like, I know you call it zero-based budgeting. It's a little bit like that in the sense, except business, you need to have what's called a cushion. So if you have one section or one group of like cushion, you need to give yourself that space in your budget. So you'll spend every dollar out, except you'll have some room for like emergency or just in case. And then it just shows investors, if they ask and they want to see it, that, you know, you're considering that there will be things that I haven't considered. Make some room for that. Never ask for like just enough, ask for a little bit more, because budgeting, as you know, like, it's not a fail safe. So you'll put $1 million and you'll probably need $1.5 million. So give yourself the room, and knowing what that looks like, right? Like, if you build out a budget and you're like, I'm going to hire, okay, well, how many people do you need to get to the next level? And is this an adequate amount of funds for the roles you need to fill, which requires you to do now some research. Okay, what do you pay a traditional whatever? And is this salary ask enough? And taking consideration to that for that, because if you decide I need an IT person and you're like, I got room for 50,000, but IT is really like 80, you know, you don't give yourself enough space. So budgeting can be tricky in that, but definitely do a little digging.
We're coming to an end for today's session. Shiloh, do you want to leave us with any most common mistakes you see or wish founders didn't make?
Yes. Oh my gosh, there are a lot of them. The most common mistake I see is people not knowing that business licenses exist. I have had to apply for so many penalty abatements for business licenses because wherever you live, people don't know that it's a thing. And they don't think it's a thing for what they do. You traditionally think business licenses are for like a brick and mortar and you need to put a business license up in the window. No, it's for every single solitary business, period. If you operate in a city, you need to have a business license. The second you registered that business with the state or wherever, you need to get a business license because they have no problem coming for your neck for all those coins, because that's how they get their, that's their municipal money. The other mistake I see a lot of people making is like, I'm just gonna live somewhere where there's no income tax. Okay, you do that. But remember that where there is not one thing, there is abundance of something else. So if you don't see an income tax like in Texas, their sales tax is through the roof. So they remember this is municipal funding, so they have to make up for what they're losing, and they do it in some way or another. So I've constantly had to like soothe wounds, like, oh, I thought I wasn't gonna have to pay. Okay, you thought. The other, I think, mistake I see a lot is not, I think like assuming that I can just handle it later. Like, you cannot, you cannot, you cannot, no, it doesn't work. So the problem is that there's a lot happening in your life. Like, you're doing buyout, you know, you're trying to buy, you're managing inventory, you're doing advertising, you're managing your staff, you're doing publicity, you're writing, you know, you're connecting with investors, you're literally doing 5 million things. The bottom of that list is your money, because it's anxiety, it's stress inducing. So you don't touch it. And then what happens is years and years and years go by until you get a notice, oh, the IRS wants to audit, what does this mean? And then you want somebody to come in and fix it for pennies. But if you do as much as you can right now while your business is small and young and easy to self-manage, it makes that down the road tremendously easier. Just isolate 1 day a month. I'm going to look at my books. If you set your stuff up right, set your rules up and your automation in, all you have to do is look at it once a month. Go in there, reconcile, make sure everything looks cute, and you're out. You don't have to keep like, oh, I waited, because you think I don't have anything right now. Well, anything turns into something and then turns into a whole lot really fast, like really, really fast. So start small, get started, start looking at it, get comfortable, learn what a chart of accounts is so you know how to set one up, learn that, you know, how to categorize things so that you know, like, okay, I need a category for, especially depending on the types of businesses that you have. Like if you sell some services and some products, like you'll need to have separate accounts for that. So just getting comfortable. If you're going to self-do it, you're going to have to sort of slow walk yourself. It isn't going to be quick, and people just assume like, I don't have anything, so I don't need to worry. You do. You need to start good so that you can finish good, and it takes the stress down. Don't wait until it's like a headache and then you got to pay somebody $15,000 to clean up your mess. You can do it yourself if you start young, until it gets too big and you're balling out, and by that time you can afford to pay a team of people to do it for you. So that's what I'll leave you with.
I feel like Carmen and I both felt like this was a personal pep talk. Like, is she talking to me? She's talking to me. Oh.
Well, good.
I mean, I'm sitting, like, the letter is literally right here from the city of LA. Like,
I saw that city of LA.
Yeah, so I think, so in all seriousness, join ComplYant. I mean, that really seems like the bottom line.
I mean, yeah, but to handle your immediate issue, you may want to reach out to the city. I know it's hard to get through right now. People are having a hard time like getting anyone on the phone. If that letter anywhere says estimate, and if they've, oh girl, let me tell you, it's a scare tactic. So here's what you need to do. Go onto the City of LA's website, and then there is like their finance online section. Look for that online payment processing, and then you'll see a button that's like business tax, you know, renewals or business tax account check. And then you go to that area, put your account details in, and it'll say, oh, how much did you make? So if you know how much you made and you know your books and you're like, hey, I made, you know, $1,000, you can type that number in. If you don't know how much you made, or if you made nothing, put 0. And then what this is it's like, they want you to comply. So they will do whatever they have to do to get your attention. And that's what that is. It's like a scare tactic. The IRS is good for this. Like, oh, here's the estimate of what we think you have to pay, $1 million. And you're like, I didn't even sell anything. So they just want you to comply. And then it's gonna hit you with a penalty because we're past the date. Filing date is March 1st, which is another tip. That's the thing founders do. They like ignore deadlines. Don't ignore the deadline. If it's due March 1st, do it March 1st. Because the day you miss it, they hit you with penalties. So do that process. It's gonna generate a real number for you. And then I would suggest filing for an abatement. You can file for a penalty abatement online also. So just don't ignore it, because the more you ignore it, the worse it gets.
Thank you, Shiloh. You got a lot of love in the chat from everyone.
Yeah.